The material covered in this lecture has to do with changes that are coming, and a look at how the balance sheet is prepared in other foreign markets. In the US GAAP, while providing some presentation standards, does not specifically give a list of items that must be presented on the balance sheet. The elements on the balance sheet is left to the discretion of the entity that is reporting. International standards have very specific list of elements that must be included on the balance sheet. As far as titling the balance sheet, most U.S. companies now call it the Statement of Financial Position. In international standards, the title always must be the Statement of Financial Position. The U.S. GAAP requires that we present current assets before non-current assets and current liabilities before non-current liabilities, and that we separate assets from liabilities and shareholders' equity. International standards do not prescribe the format. Often, the international standards, such as the one presented here from British Airways, will present first the operational assets of a business because this is the largest investment that the business makes. They next prepare their other non-operating assets and then present the current assets second. This is not a major difference. The amounts would be the same whether British Airways reported in the U.S. format or the international format. Here you also see a slight change in that they give shareholders' equity before liabilities. The term minority interest you'll come across in your advanced accounting courses. And then the presentation again of the non-current liabilities first versus the current liabilities. Again, this is mostly format, not really any kind of substantive difference in the reporting. There is, however, a big change being contemplated and actually moving rather quickly through the final phases of implementation. And that would drastically change the formatting of the balance sheet. FASB and the International Accounting Standards Board are going to change the format of the balance sheet so that we present business assets, those assets that relate to operations and then investments, and segregate them from financing, and then have a specific section on liabilities and assets related to income tax and discontinued operations, and then a section on equity. For right now, this is a information only. You are not going to be required to know this format, but just keep in mind that things are changing. And here is an example of what this is going to look like if it is implemented. And again, the reason you don't need to know it is because this is a draft that is subject to change. But as you can see, this is quite a different looking balance sheet than what we have been working on in our previous lectures. So you'll have net business assets as opposed to net total assets. You'll have operating assets and operating liabilities in the same section, and these will be netted out, assets minus liabilities. So we will have net assets, net operating assets presented. And this is the continuation. Again, we will have total financing debt presented, and then the shareholders' equity. But this goes on now to provide a section on income tax, which we will cover in Intermediate 3, a separate section on discontinued operations, which we'll talk about in our next topic, topic 4. And then you see down here, we have subtotals for total short-term assets, total long-term assets, and then total assets, and then a breakout. Again, this is a much different format. It apparently is moving along pretty quickly. The users of the financial statements like this format. It provides a lot more detail, and that is going to be where we're going. And you should keep an ear out as to the implementation date, because that's going to affect the material that you'll be required to know for the CPA exam.